Hey, this is Arthur Hill, Chief Technical Strategist at TrendInvestorPro.com. You are tuned into our YouTube channel for our weekly video analysis. If you like this video, please give us a thumbs up and consider subscribing. So today we're going to start with these big bounces we saw in the latter part of May, big bounces in SPY and some of the key sectors. And we're going to look at those bounces and put them into perspective because I still think they're counter trend bounces because if we look at the trend evidence, it's still down for SPY in these big sectors. Now looking outside of stocks, I'm seeing platinum come to life and palladium still has an interesting setup working. So I'm here on Stock Charts ACP, and I've got two indicators shown. I've got the trend composite here, and I've got the momentum composite. And the trend composite is for identifying the trend. It's not immune to whipsaws. You can see we got a whipsaw with that bullish signal in late March, but it turned back bearish in the middle part of April, just before this big decline started here. So the trend is down basically for SPY based on the trend composite. And then this is used to identify oversold conditions when the trend is up, not when the trend is down. All right, so we had an oversold condition back in September, but now that the trend is down, I ignore these oversold conditions because I'm not interested in trading oversold bounces when the bigger trend is down because that's the dominant force at work. And so if we look at this chart here, where would we expect resistance on an oversold bounce? And there are a couple things we can look at. First of all, we've got some support levels that were broken from that January low, so we can put a line there. We've got some lows here coming in February and March. I'll just take the March lows, otherwise it's going to get too noisy maybe. And then we've got these highs here from the May highs, and those mark resistance. So here we have broken support turning into resistance. That's classical technical analysis in all of the books. And then we've got two highs here marking prior resistance where demand failed. And so when we get into this zone here, which we just touched on this bounce, this is kind of the resistance zone. And I think we have to work with zones when we're dealing with an index or an ETF that has dozens of moving parts, AKA stocks. And so if we also look at this decline here, I'm not going to put on the Fibonacci retracements, but basically you see this decline. Well, we're going to retrace around half somewhere in this 420 area. And that's also a potential area to watch for a reversal on a counter trend bounce. So three things I'm looking for here is basically broken supports that turn into resistance that can be future resistance, and the retracement zone as far as a future resistance level is concerned for SPY. So we've had this big bounce and we're entering this zone. So it's kind of it's between a rock and a hard place. You got a downtrend, so I'm not interested in trading the upside, and I'm ignoring bullish setups until we get an uptrend. And we're also in a bear market environment. The composite breadth model at Trend Investor Pro turned bearish on April 11th. So it is still bearish, telling us we're in a bear market. Now here's a marked up chart where I've added some annotations to it. And what I want to point out here is that, you have this breakdown in January, then you have a 6% surge, then you have a lower low, and you have a 10.7% surge, and then you have a big decline, and we got a 6.6% surge in 5 days. So we can see that during this decline, we've had some pretty sharp surges in SPY. And this can be expected in a bear market or in a bigger downtrend. And there's that 50% retracement for reference. There's the 67% retracement for reference as well. So we're kind of coming into a resistance zone for SPY right now. So I'm going to next look at the big offensive sectors. And it's important to remember that SPY and the S&P 500, they are market capitalization weighted indexes, or an ETF, basically SPY. And that means the biggest stocks carry the most weight. So the biggest sectors also carry the most weight. And so if we look at the breakdown for SPY, we can see it's 27% information technology, 14% healthcare, but that's not an offensive sector, I don't think. Offensive sectors are technology, financials 11%, communication services around 9%, industrials almost 8%, and consumer discretionary 11%. So the reason I consider these five to be those offensive sectors is because they're the ones that are sensitive to the economy, consumer discretionary, industrials, the backbone of manufacturing, financials, banking system, communication services, that's going to be video gaming, Facebook, Google, and such. And then technology, of course, is the high beta trade, the growth trade, and that benefits when you're in a bull market. Whereas healthcare is a little bit more defensive than these other five sectors. Now, it's also important to remember that these five sectors account for like 65% of the S&P 500. So as they go, so goes the S&P 500, and we should be keeping an eye on those sectors to kind of get a weight of the evidence approach to our analysis, our broad market analysis. So if we look at these sectors, they're all in downtrends, and they're all in the midst of oversold bounces. And why do I consider it an oversold bounce and not a trend-changing event? Because the bigger trend is clearly down. Because if you look at XLK, it's lower lows and lower highs. That's a big bounce. Is it interesting? Not really, because the bigger trend is still down. When does this bounce become interesting? Well, when you start getting a breakout around 155 and you say, oh man, that's way too late. Well, that's kind of the way trend following works. You know, we accept big oversold bounces and we don't take a trend change until we get some signals. And we don't have any kind of a signal here. We've got a falling channel in XLK. We've got a bearish trend composite since the middle part of January, and it stayed bearish. And you can see we've got this bounce. We're coming to broken support, turning resistance. There's resistance from the May, late April, early May highs. So this is kind of a big zone of resistance XLK is moving into. If we look at XLY, big move, very oversold. If you look at the momentum composite, it was oversold for almost 4 weeks basically because this decline was so strong. So you get oversold below the lower channel line there, and then we get a bounce. But again, it's an oversold bounce within a bigger downtrend. And when the trend is down, this ETF is not even on my radar for a potential setup. All right, I probably shouldn't even be talking about it right now because we should be talking about ETFs with bullish setups. And that's mostly in the commodities space right now. But here we can see this kind of affirms the bear market and the long-term downtrend in SPY and the fact that we're in a clear downtrend. We look at financials. It's a clear downtrend. Big bounce, but it didn't even get past the prior support break and is failing already. And maybe it breaks above 36, but I would say big deal. It's still a downtrend. And more importantly, we're in a bear market. In a bear market, we have to be more wary overall. You look at industrials, there's a falling channel and a downtrend, oversold below that lower channel line. So we're just getting an oversold bounce. And maybe it goes to 98, 100, but it's still an oversold bounce within a bigger downtrend. And then we look at communication services, again, below that lower trend line, oversold, but finally got a bounce and one of the weakest bounces of all of them. So this is by far the weakest sector of the group. So at trendinvestorpro.com, I do track the trend composite signals for 274 ETFs. There used to be 276, but I had to take out the Russian-related ETF. And this is just a glimpse of the main analysis page where I put out reports on Tuesdays and Thursdays and a comprehensive video on Wednesdays, as well as an update to the market regime page. But what I want to show you briefly here is the ETF signal table that's also available to subscribers. And this signal table shows you the signals in the trend composite. Here we have uptrends. And if you look over on the left, you can see these are all energy related. We got chili as well, soybeans. But energy is just dominating the landscape as far as uptrends. And this is my relative strength ranking. And you can see they're all above 90 here. So very good relative strength there. If I sort by the name here, you can see a top-down sort. And that's what I want to show you is the sectors are going to be down here. So here we have the sectors, and you can see they're all in downtrends except energy and utilities. All right, that is clearly not a bull market configuration right now. And we also have a neat little sort that you can do for the recent trend composite signals, and there are the new uptrends available to subscribers, as well as a chart link on the right. So I wrote about Palladium last week on Friday, and it was featured in Chart Watchers. And what caught my eye on Palladium was you have this big 100% advance, and that looks like an impulse move. In other words, something that is part of a bigger uptrend. And then we get this big 40% decline. And yeah, it's a big decline, and yeah, it went further than I expected, but we're still above the December low. So it looks like a big surge and a really big correction. And a big surge should probably deserve a big correction. But what caught my eye was it formed a falling wedge. We started to firm around here, and you can see we got two resistance levels there in the past few weeks. So we failed, demand failed at just below 200 twice. And so if we can get a breakout there above these May highs, then that is going to be bullish for Palladium. And you can see the trend composite has already turned positive, so that might be foreshadowing. But you can see we failed there twice, and so that's why I'm watching to see if demand is going to be strong enough to push us above. And then the other one that's on my watch list is platinum. Now, technically, platinum is in a downtrend based on the trend composite. But when we're looking at the price chart and we're looking at bars, we introduce subjectivity. The trend composite is basically systematic. It's either or. Either it's uptrend or it's downtrend. But when we look at a chart, we can kind of make some nuances there. We can introduce biases if we're dangerous. But if I look at this chart, I would say prices were flat. Because you can see since September, we've been holding this 9 area 1, 2, 3 times. And then you can see we do have a higher high in March. So we had a higher high, very deep pullback. What else is new? Pullbacks are always deep these days. But what's really interesting is gold is down over the last 23 days. Silver is, palladium is, and so is the base metals ETF, and so is copper. All the metals are down over the last 23 days, the past month. But palladium is up. Platinum is up. So platinum is showing some relative strength. And so at Trend Investor Pro, identified first this breakout, and we get this pullback, and we have a resistance level right here, and we're on the verge of breaking it. And I would also point out that I think that there is a smaller wedge working. So you have this surge here, and then we have this very little wedge, and then this other breakout. But I think platinum is breaking out here, and I think that is a bullish development. And if you go below this low, then you have to reevaluate. So if you'd like to know more about trendinvestorpro.com, you can click on the link in the description below. If you like this video, please give us a thumbs up and consider subscribing. Thanks again for tuning in, and I'll talk to you again next week. Have a great day.